Good morning. Mike Brady here with Generosity Wealth Management in Boulder, Colorado. Happy October. Here to talk about where we are right now. It's the beginning of October. We've got 3 months left in the year. I have been positive and optimistic for the entire year, except I was losing the faith there a little bit. I was concerned in April as it was starting to slow down in May, but this summer I kind of reaffirmed that I was feeling very strong about this year, and so far that's played out very well. The third quarter was good. June and July in particular were very good, and depending on what unmanaged stock market index you're in, you're either single digits up to double digits. Of course, you should have a well-diversified portfolio with stocks and bonds and cash, etc., possibly, and of course you should talk with your financial advisor to find out what works right for you. Hopefully that's me. Maybe it's somebody else. But that being said, I continue to be optimistic going into the fourth quarter. But this is going to be an important quarter to watch, because one thing that has me concerned is the Chicago Purchasing Managers Index, the PMI inventories, and it's negative for the first time since 2009. And I'm going to throw a graph up there if you could look at that graph there, but you'll see that when the index has been below 0 or below 50 technically, it doesn't lead to good things. That's a bad leading indicator. That being said, there still continues to be an awful lot of cash on the sidelines. I do believe that no matter who wins the election, companies will be better able to quantify what their costs are of doing business, whether it's one or the other. So I think that that's going to be very important. If the fourth quarter is not great, that's going to really affect how I feel going forward into 2013. One thing that I do want to comment on is municipal bonds. You've heard me badmouth them for about a year and a half, 2 years, and I've basically been wrong over that time frame. I've either been wrong or I've been too early. I mean, we've got 3 municipalities in California that declared bankruptcy in quick succession this past summer. Municipal bonds in general have done well as a fund this particular year, but I'm still, not understanding it. There's not, from my point of view, a huge premium for the amount of risk that you're taking. Yes, there is a premium over some other, in a low interest rate environment, other offerings, but I'm just not getting why municipals the risk is not being factored in as much as I think that it probably should. So I don't know, I just wanted to talk about municipals there. That's kind of a mystery to me. More than that, that's going to be something we're going to be talking about in the next 12 to 24 months. Maybe I'm just premature in my concerns there, but it is a concern nonetheless. That being said, that's really what I want to say, is that I am continuing with the current allocations that I have, making a couple of swaps here and there. I would love to talk with you. You've got whatever recommendations I give here on the video, of course, it's just very general. Talk with me, talk with somebody to really find out, match your risk with your investment portfolio and have it diversified. Although it's not a guarantee, I think that having a diversified portfolio is a good idea. So anyway, Mike Brady, Generosity Wealth Management here in Boulder, Colorado. I will talk with you soon. I've been a little lax in some of my videos, but I'm going to get right back on it. And for my existing clients, you're going to see some great new things coming forward. I've got some great client events that you'll be hearing about, and some great mailings and great magazine I'm going to be sending out, etc. So stay tuned, as they say. Mike Brady, 303-747-6455. Thank you. Bye-bye.